He's one of the most accurate forecasters around. James Shugg, senior economist at Westpac, with me in the studio now. James, good to see you.
Always
Thanks for coming
good to be
in.
here.
Thanks for racing in to come to see us. So your expectations then ahead of this report?
Well, we're looking for another fairly soft outcome. We think payrolls probably rose about 65,000 in the month of June. That's like an 80,000 on the private side, with 15,000 job loss for government jobs. I know that ADP's private payrolls measure was quite a bit stronger, but they purport to measure the same thing. And if you look at the numbers over the two quarters, the first quarter and the second quarter, to get the scale of decline that ADP had in Q2 relative to Q1, you'd have to get a payrolls outcome around 25,000. So I'm still very comfortable with our, sub-consensus 65,000 forecast for non-farm payrolls.
You're maybe at the bearish end of these estimates, right?
I think we are, but look, the economy was growing pretty strongly at the end of last year. Because of that, we saw some decent jobs numbers in the first 3 or 4 months of this year. What's happened since then, of course, is employment has started to slow because we've had, in the first quarter, just 1.9% annualised growth, and on our forecasts, in the second quarter, just 1.2% annualised. That's not the sort of growth pace that's going to generate many jobs in the US, I'm afraid.
So do you think that the labour market will start to pick up in the coming months in the second half?
Not really. I think we are going to get some very soft numbers reflecting the disruptions that have been taking place, that are the one-offs that Ben Bernanke and others have been talking about, related to Japanese supply issues, for example. But there is an underlying softness in the US economy that ain't going away. I mean, the US economy, I think, is going to struggle to better a 2% growth pace in any quarter this year. And as I say, the second quarter just finished, we think it'll only come in at 1.2%. That sort of growth pace for the economy means you're going to struggle to get 3-digit monthly jobs number, payrolls numbers, i.e. numbers around 100,000 will probably be the best that you can expect.
There are a lot of people now saying, look, after the sort of volatile period we've seen in oil prices, that could start to alleviate a little bit now. We might see cheaper fuel. Would that go any way to holding down costs?
Oil prices are going up again. I mean, risk aversion seems to be diminishing. Risk appetite's back on the table because investors falsely believe that Europe's sorting itself out. I mean, hardy ha to that. But investors have been pushing up stock markets. Risk aversion seems to be diminishing, and that's pushing up commodity prices. Another $2 yesterday on the oil price. That is not going to be helpful for the US consumer.
What does that mean for consumer spending then going forward?
Well, it's going to remain subdued. I mean, we're going to get retail sales figures later this month. They're for June. They will incorporate a lower gasoline price. Our sense is that they probably won't include a bounce in discretionary spending, even with people having a bit more money to spend because they aren't paying as high gasoline prices. And I think that'll be a real sign that consumers, households in America are really pulling their heads in at the moment. They're wanting to save more because they are concerned about the prospects for the economy, the prospects for unemployment, and the prospects, for the government's budget position.
So then are you saying that we will see an upward trend then in energy prices?
There's conflicting forces at play. The US economy remaining weak and the Chinese authorities probably overslowing their economy will actually put downward pressure on commodity prices later this year and into next year. But that's going to be at a time when the US economy is still very, very soft. So that might help at the margin, but that's just one headwind for the economy. The housing market is another significant headwind. The small business sector has still got real problems in the US. Fiscal policy is a drag on the economy now in the US. And American politicians, they just can't seem to get their head around the issue. This is a man-made problem about the debt ceiling. It's not like a European-style problem where they really are stuffed. They could fix it like that if they could just have a glass of wine together and sort it out. But they risk pushing the economy, as Obama says, into recession because it's sailing pretty close to recession as it is at the moment.
Well, you touch on a wide range of issues. I'm glad to know that they're not stuffed, as you put it, as we are here.
Not yet.
No.
Not yet.
OK, so James Shugg, we'll get you in on that topic then soon.
I love stuffing.
Yeah, OK, thanks very much. James Shugg, senior economist at Westpac.